What's up, boys?
Batnick.
Look what he brought along. Dude, you have the best gear, Batnick. Can we just start there? I try and model my style after you. What do we have to do? Because you've clearly made it. What do we have to do to get a morning show shirt made by Tropical Bros? Because I think you guys just broke like their e-commerce site.
Oh, yeah, we did cause supply chain disruptions. But guys, I'm rocking your swag today. I mean,
I like it.
Love it.
Sell puts naked.
Feels good. Looks good.
You got the reverse thing going.
What's
right?
that?
Nothing. We'll figure.
Oh, my camera. I think you guys. Yeah.
It's all good though. You look good though. You look better when you're mirrored than you do normally. Has anybody ever told you that?
No.
You look more handsome.
The balds are symmetrical, so it shouldn't make a difference.
But it does.
Okay.
You know, it does. All right. So
he needs to get a pair of bird dogs.
Hold on. I want to talk about the debt ceiling and GDP growth.
Stop. No, you don't.
Talk about
you don't want to talk about it any more than I do.
Can we talk about we're not allowed to talk about tax loss harvesting, Josh. I want to have this conversation with you about tax loss harvesting, and Josh says that we can't do that.
That's super boring.
I want to know.
I know, but I'm very interested in it. So that's another conversation for another day. Hold on. Strazza doesn't like it when I steal all the questions when our guests come in. So, but I'm going to do that. Can you just tell me what's on your mind? Like, what are you thinking about in this market? Here we are, early June 2023. We've been in a bull market for almost a year. I don't know if you guys watch The Compound and Friends, but we've been talking about that for quite some time. Have you, when you look at the markets, you wake up, you're chit-chatting, with your investment buddies at a bar or whatever. Like, what are you talking about? What are you thinking about? Well,
JC, I like to keep things simple. So here's where I'm at with the market. I'm reminded of where we were at in the beginning of the year. Historic pessimism, whether it's economists, money managers, retail, hedge funds, everybody expecting the worst. And that did not come to pass. And so we bottomed in October, as you remember, and momentum started drifting higher, took hold. And then the fundamentals confirmed, right? We were expecting negative 6% earnings growth, and it was only 2%, and positive revisions, and the world did not end. And I don't think a lot of people foresaw the economy accelerating into rising interest rates, earnings hanging in there, layoffs stabilizing, inflation coming down, jobless, the labor market's still incredibly tight. So things have not gone the way people expected. And when everybody expects one thing and is positioned for one thing and the opposite happens, you can get a rally like this.
How about what you're seeing now? Because you talk to a lot of people. We get certain sentiment reads, but we're kind of hanging out on Twitter too much. So, who knows how much you can weigh that. You're talking to real investors every day. What are they thinking about? What are they talking about? Are they asking about the debt ceiling? Are they talking about growth stocks? What's the sentiment read from your world?
Yeah, so I don't want to just pretend that I know what the sentiment is, because I'm not talking to clients every day. So I could give you an answer, but I would be made up. So I don't want to do that. I get the sense, and I'd love to hear your guys' thoughts. I get the sense that not too many people are particularly enthralled with this rally. Not too many people have benefited from it. At least the people that are vocal about it. People seem to be in disbelief. People seem to think that another shoe is going to drop. And I understand all of that. And I understand all of that, especially if you've been underinvested.
I think you and Ben were making the point on the show last week about how when breadth is narrow like this, it doesn't always, speak to some sort of impending crash. But sometimes it just speaks to some catch up, or some rotation.
So intuitively, I was always, if you had asked me, is narrow breadth bad or good for forward returns, I just would have said bad, right? Because as soon as the generals start leading, once they shuttle the soldiers or whatever that line that I'm butchering is, just intuitively, that made a lot of sense to me.
Yeah, but it's what else is happening, right? Just because narrow leadership doesn't necessarily mean widespread distribution. You can have widespread distribution while you have narrow leadership.
True. Like
in 2021, you had that.
Yeah, and
you don't have that now.
And in 2000, you had that, right? And so that's not what's happening now. It's a great point. But so somebody did a great study showing what happens when there's extremely narrow leadership to when there's extremely broad participation. And broad is better, right? Like when every stock is like that, you want that. But high concentration does not necessarily mean, holy shit, the world is going to end. I think historically it's more like, how many blog posts, how much ink has been spilled over the last decade about narrowing breadth, and it almost always resolved itself to the upside, where the rest of the market that is not participating, catches up. So if you break down the S&P 500 by market cap decile, right, the top 50, next 50, next 50, the top 50 are up like 11% on average year to date, and the rest of the market is flat, up 0.7, down 0.1. It's all in the top 50. The rest of the market historically, at least in recent history, has caught up, number one. Number two, think about the companies that are leading. Apple, NVIDIA, Google, Netflix, like Meta. Why is this a bad thing that the best companies in the world are leading the market? JC, Steve, you got any thoughts on that? Like, why is that a bad thing?
I'll throw something else in there. These companies like Amazon and Meta and Apple, they might be one company, they might be one stock, but they got a shit ton of stuff going on. Like AWS is like an S&P 100 company on its own. You know, Apple's EarPods are bigger than Netflix. You know, so like there's a bunch of businesses within these companies. So yeah, I don't think that that's a negative at all. Number one. Number two, what's wrong with your best players scoring a lot of your points? Like that's pretty normal,
Jokic
right?
at 40. Although actually that's a bad example, but you get the point.
For me, like we have to talk about what does it mean for most investors, right? So narrow leadership, fine, but what stocks are leading? It's the most important ones. Like this could be a lot worse. I could be telling you that all the ARK stocks are leading.
Right.
No,
the best stocks are winning. Yeah, they've been winning for the last decade. How many times have we done this?
Yeah. By the way, also Batnick, in the last 6 months of last year, because the market, you talk about how the market bottomed in October. I've been arguing the market bottomed in June because that's when the new 52-week lows list peaked. By the time October came and the S&P and the Dow put in their final lows, there weren't any stocks left going down. Nothing, everything was already going up by then. So internally, the actual market of stocks bottomed a year ago, and then those indexes put in their bottoms in October. So in the back half of last year, everything was working except for these mega cap growth stocks, right?
Amazon bottomed in October. That stock fell almost 60%.
Facebook as well bottomed in October. As soon as interest rates peaked, by the way, probably not a coincidence, but everyone was complaining that these big stocks weren't working. And now this year they're complaining that they're working too much. So for me, I just think that they like to complain. So we saw the sector rotation that we needed coming into the year. The only ones not working started to work. And now in a similar fashion, now we're looking for sectors to rotate once again. Are we going to get back into those cyclicals, the industrials, materials, energy, financials? Are we going to get that rotation this summer? Do you think it started last week?
I'm going to answer a different question that you didn't ask, and then I'll come back to that. I think it's important to keep in mind for the listeners and viewers. The people that you talk about complaining are the people that leave Yelp reviews, right? Most of the world is not miserable. It is a misrepresentation of social media. The people that you hear about are the people complaining because bad news spreads. And we know that. I don't think the average investor is as miserable as we're making it out to be. I don't think most people are as miserable as they are on social media. So back to your question, did the rotation start last week? What rotation are you talking about?
Small caps, ARK.
Yeah.
Well, I think
industrials.
That's going to depend a lot on regional banks. Okay,
but how many regional banks are in the industrial sector?
Fair, but in the Russell, they're a huge component.
Yeah.
Listen, if rates are going to come down in a material way here, you're going to see regional banks rip.
Rates come down?
I know that's confusing to you, but that's the situation right now. Their unrealized losses that are on their books right now will go away very quickly if interest rates can come in.
Steve, sorry to switch the topic, but JC, I'd like to ask your thoughts on this. The dollar has been strong while stocks have been strong. What do you make of that?
Yeah, for a few weeks, right? For a month or so. Yeah. I mean, the negative correlation between the dollar and stocks in general has been very strong, really since the Trump election. And we've seen that negative correlation. So, the question becomes, are we impressed with the resiliency in equities despite the bounce in the dollar?
That's my bias.
Or are those correlations now changing, right? As bull markets progress, and you can argue we're almost a year into this bull market, you're seeing these correlations dissipate, right? You're seeing the correlations among S&P components completely falling apart. So would it also make sense that those intermarket relationships also become less strong? That's the other argument. I'm not convinced of that. Our friend Mark Dow, that's his argument. I respect it. I'm just not convinced of that. I think this might be maybe something temporary. And like you said, you agreed, I'm more interested in the resiliency of equities despite that stronger dollar.
Steve,
I'm more interested in that.
You were vigorously shaking your head.
I mean, it's very unlike JC to say this. I love how he keeps blaming Mark Dow. Poor guy.
I'm open-minded.
It's fine. I get what you're saying. smart people tell me things are possible all the time, but let's see it show up in price before we make that bet. We're just not seeing it yet.
Guys,
Right, but I'm thinking through the possibilities, and that's a valid argument. Like, I'm not going to just dismiss that.
Correlations can always dislocate, right? And we can always have divergences, but it's not the bet I want to make, especially when, the dollar was everything last year, right? That was the call. Dollar rolled and then stocks ripped. That was the bottom. I'm not ready to throw it out that quickly.
So I know that the S&P is getting back to where it failed, where the bear market rally failed in August.
Yeah.
I think that stocks are innocent until proven guilty, especially if economic data does not soften, if the Fed keeps doing what they project to do, which I guess changes every day. Whatever. Disregard that. But my point is, I think that people are going to have to chase. If stocks don't pull back, people are going to have to chase, and I think the paid trade is higher.
Listen, and when we look at the weakest groups, whether it's value or cyclicals or the banks or the ARChy stuff, small caps, stuff that we want to play catch up, they might not be going up and participating very much, but they're not falling. They're not breaking key levels. Like, these indexes are holding where they need to as the rest of the market trends well. They're just stable, right? So do they rebound off these levels? I think there's a higher likelihood the longer that they hold these key levels. You could look to the 2018 highs for a lot of the stuff, whether small caps, financials.
I think the poster child of the junk, at least for me, was Zoom, which might have just had a failed breakdown. It's been hanging low for a long time. Got the shit kicked out of it after a really lousy earnings report. It showed like 3% revenue growth for a growth stock is not very good. But that's come back. And so if these names can't go lower, I think you got to consider the fact that they might start to go higher.
It's funny you said that. My sort of bellwether, my gauge, my poster child of those is PayPal.
Yeah, I was just going to say that. Yep.
So also really interesting. I don't disagree with your Zoom look. For me, it's more PayPal, but yeah, that's what it is for me. Before we let Batnick go, NBA Finals.
Holy shit. So
yeah, I wish Batnick could stay for recess. That's really what we need him for.
Bring him back.
I'll keep it quick. So I have not faded the Heat. I bet on them to beat the Celtics for the series, not because I thought they were going to win, but they were like plus 430, which made no sense to me. So I parlayed the Celtics and the Nuggets to meet in the finals, and I'm pretty much all in on the Nuggets in 6 or less. So I was not too thrilled with the game on Wednesday. However, all credit in the world to Spo. That guy's obviously the best coach in the world. The roster is trash. Gabe Vincent is looking like, somebody who, a lot better than he actually is.
How is their roster trash?
It's not, dude, stop. I'm not having
it. In the NBA Finals.
Because Spo
remember the Knicks had a deep bench?
They did. We lost quickly. Julius had ankle surgery. Anyway,
sucks.
I'm not hating on. Listen, I'm coming here to be nice. I'm not hating on the Heat. Respect the hell out of them. I still think they're going to lose.
Called their roster trash.
The roster is trash. It's not a good roster.
How is it trash in the NBA Finals?
Did you go to some games this year, Mike? Were you at the Garden?
Yeah, I hope goes.
Right.
I went to the Heat. I went to the Heat Celtics game actually.
Really?
Really?
Yeah, I was in Miami a few weeks ago.
Nice.
Thanks for texting me.
It's a nice arena, right?
No, it's garbage.
Oh, come on.
Garbage. I walked in and I was like, are you kidding me?
Hater.
Horrible. That I will hate on. The arena's trash. But
are you serious? Right on the water?
I have one more nice thing to say. The crowd was much louder than I thought. Much louder than I thought.
Yeah, I thought it was fun.
Because on TV, it looks empty. It is empty all the time. But anyway, all right, I'm getting the rug.
All right.
Thanks, guys.
I always rely on you for shows. You watching anything good these days?
I'm pretty dry.
Air last night, that Nike movie, I thought it was pretty terrible.
What?
You liked it?
I loved it.
Oh, it was cheesy. It was too much. It couldn't have happened that way. I don't believe that story at all.
Well, I don't watch movies for the factual story, but I loved it.
I love Ben Affleck and Matt Damon, so I did enjoy that. Anything else good? Anything else I should watch?
I'm dry. I am bone dry. Fubar is fun. It's like True Lies. It's like silly nonsense.
Fubar. Yep.
It's Arnold on Netflix. But no, I'm dry.
All right, I got one more before you go. Excited for Future Proof 2023. Just going to throw this out there. Morning show live every morning. Me and JC got you. So just
hell yeah, I'll hop on with you guys.
Cool.
All right, Michael Batnick, Ritholtz Wealth Management.
Man and Redman. I'm going to be backstage, so I don't want to hear any excuses.
All right, fellas. Thank you.
Thanks, Michael.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go